Bruce, please tell us about your some of the past syndicated projects you've done where you've brought on investors, and kind of walk us through the process of how that came about and your dealings with investors, if you may, please.
Yeah, well, I'll share the first one. It was pretty exciting. It was one of the first, I guess it was the second syndicated apartment. We did a 64 unit, we did a 120 unit at the same time. But the 120 unit building is really special to us because it was brought to us by another investor that says, hey, we need some help with this. We have, we got this property under contract. The owner is facing a problem with the bank where he needs to, they called the note, and he has 21 days to repay the note or he goes into a pretty serious situation. So, you know, foreclosure like, but they're running into some big problems because of cash flow. So we had 21 days to raise the capital, and I found a local family office who put up the mortgage, and then we raised a little bit of the capital. And then a very good friend of ours says, hey, I'll put up, I'll write a check so we can close, and then you can backfill with investors. And so he wrote the check, and then we raised the money after we closed. And over the next couple of months, we were able to pay the investor back his chunk of change. And he was so excited, he left a pretty good sizable amount in there for us. And then, so the first syndication we did was not probably one that you'd write a business plan on, but it worked to get our foot in the door on how to raise capital and how to create an asset, a high performing asset. And that one there was, it was supposed to be an 18 to 24 month project. And in 17 months, we got an offer on it, and we did really well on it. And so the first one was almost by accident. Like, we were forced, how do we raise capital in 21 days, you know? And we just said, oh yeah, we can do it. And then we went and did it. So
Great job.
But I don't recommend that from a standpoint of that's what you should do. So, but it's one way to get your foot in the door, right? But the beauty behind that is then when we got that, then we sent out the quarterly reports to the investors, shared with them the progress. Now, this particular syndication, and most of ours have been where there's two times where there's money that exchanges hands. There's when they put it in and when they get it out. And so I know with working with what we're developing with you, there will be payments from day one because we'll be buying performing assets. Our history has been buying non-performing assets and turning them into high-performing assets. And then we've been selling them off outside of a couple, but that's where we've really had this strength. And I feel that is really coming into when we maintain an asset, we know when something's not right. You can just see the numbers. Okay, we need help here. We've already done everything from vacating units completely to refilling them. So we know what things to look for when there's metrics that change on the monthly reports.
Absolutely, and that's a great point. So when we were on the quest of finding the team to partner with, that was one of the important items for me because my background is in construction and development. So it was important that the team we're looking to partner with had experience doing major renovations and major repositioning rather than a team that did just a minor lipstick upgrade. So knowing that you guys reposition totally unstable assets and bring them to stability was a great point and a great energy for us to move ahead with you.